Greetings, electrifying investors, and welcome back to Stocks Telegraph. Today, we're shifting gears, pun intended, to focus on a company in the ever-evolving electric vehicle charging market, BLNK Charging. BLNK Charging isn't just another name in the game, they're an innovator and leader, offering charging solutions that cater to both EV drivers and the businesses that host them. From selling and operating charging equipment to providing comprehensive charging services, BLNK Charging is building a robust network across the United States. But with so many players in the EV charging space, is BLNK still a relevant investment opportunity? Let's plug into the data and see if BLNK has the juice to power your portfolio. Before we dive into the financial nitty-gritty, we want to hear from you. Are you bullish on the future of electric vehicles? What factors do you consider when evaluating EV charging companies? Leave a comment below and share your thoughts. Now, let's grab our financial toolboxes and get ready to analyze BLNK's recent performance and future potential. In the next segment, we'll unveil some key financial data and see if the numbers support a continued belief in BLNK Charging. First up, let's take a look at the current price. BLNK sits at $3.10. While some investors might prefer a lower entry point, it's important to consider the bigger picture. Analysts have a bullish outlook on BLNK, with a mean target price of $6.38. This significant difference suggests that analysts believe BLNK has substantial room for growth. This optimism is further bolstered by BLNK's impressive performance last month, with a growth of 25.00%. This positive momentum indicates that BLNK might be on the right track. But BLNK's potential goes beyond just its current price. The company is experiencing exceptional growth at various levels. This year alone, BLNK has seen a staggering 77.05% increase in earnings per share. This means that BLNK is generating significantly more profit than in the previous year, a sign of a healthy and expanding company. Furthermore, both quarterly earnings and revenue growth paint a bright picture. BLNK's quarterly earnings have grown by 67.42%. And their quarterly revenue has grown by an impressive 73.38%. These figures all point towards a company that's firing on all cylinders. The numbers speak for themselves. BLNK's financials are impressive. A strong current price, significant analyst confidence, and exceptional growth at all levels make BLNK a company to watch. BLNK recently released its 8K filing, and the news is electrifying. For the first quarter of 2024, BLNK reported a significant surge in revenue, exceeding analyst expectations. Their total revenue jumped a remarkable 73%, reaching $37.6 million compared to just $21.7 million in the same period last year. This impressive performance showcases BLNK's ability to capitalize on the growing demand for EV charging solutions. But BLNK's growth story doesn't stop there. The company is experiencing significant growth across all revenue streams. Product revenue surged by a powerful 68%, reaching $27.5 million. This increase is likely due to a combination of factors, such as higher demand for charging stations and an expanding network. Service revenues also saw a substantial uptick of 72%, reaching $8.2 million. This can be attributed to increased utilization of BLNK's charging stations, indicating a growing customer base. Even other revenue sources, including warranty fees, grants, and rebates, jumped by an impressive 264%, reaching $1.9 million. This diversified income stream further strengthens BLNK's financial position. BLNK's financial performance isn't just about revenue growth, it's also about profitability. Their gross profits soared by a staggering 195% to $13.4 million in Q1 2024, compared to just $4.5 million in the same period last year. This significant increase is coupled with an improvement in gross margins, rising from 21% to a healthy 36%. This strategic shift towards higher margin products and increased vertical integration in their manufacturing processes is paying off for BLNK, allowing them to retain more profit for future growth. BLNK Charging's recent financial performance is a testament to their strategic vision and ability to capitalize on a booming EV charging market. With strong revenue growth, improved profitability, and an expanding network, BLNK is a company to watch. However, no investment is without challenges. Leave a comment below. Are you convinced that BLNK is a major player in the EV charging landscape? BLNK is a company that's not afraid to adapt. Their recent operational strategy, which includes vertical integration of charger manufacturing and optimization of operational costs, is already yielding positive results. BLNK's president and CEO, Brendan S. Jones, has openly discussed ongoing adjustments aimed at strengthening their market position and streamlining operations. These strategic moves demonstrate a proactive approach to navigating the competitive EV charging landscape. While BLNK experienced a decrease in bookings in April 2024, it's important to remember that short-term fluctuations don't necessarily negate long-term potential. BLNK remains optimistic about its yearly revenue targets, maintaining a forecast of $165 million to $175 million. This confidence is bolstered by their strategic initiatives, such as consolidating facilities and leveraging their new headquarters in the DC area. These strategic moves are designed to improve efficiency and strengthen BLNK's presence within the burgeoning US EV market, positioning them for long-term success. BLNK Charging is a company in motion. Their recent financial performance is impressive, and their strategic approach to navigating challenges is commendable. While a decrease in bookings is worth noting, BLNK's long-term vision and commitment to revenue targets inspire confidence. So, should you count BLNK Charging out? The evidence suggests otherwise. BLNK's impressive financial performance, featuring surging revenue, improved profitability, and an expanding network, is a strong indicator of a company on the rise. Their strategic approach to operational efficiency and navigating a competitive market further strengthens their position. While a short-term decrease in bookings is a cause for observation, BLNK's long-term vision and commitment to revenue targets inspire optimism. Ultimately, the decision to invest in BLNK rests with you. Remember, responsible investing requires a measured approach. Consider your risk tolerance and investment horizon. Research alternative EV charging companies and weigh the potential rewards against the risks. Conduct thorough due diligence before making a decision. BLNK Charging presents an intriguing opportunity for investors interested in the booming EV charging market. However, responsible investing involves a calculated approach. We've provided the information and analysis to help you navigate this exciting sector. Let us know your thoughts in the comments below. Do you believe BLNK is a well-positioned player in the EV charging landscape? What questions do you have about BLNK's future prospects? Thanks for joining us on Stocks Telegraph. If you enjoyed this analysis, don't forget to like and subscribe for more in-depth explorations of exciting investment opportunities. Until next time, happy hunting!